Welcome back to Watching Business Incorporated on Channels Television. We head to the markets now with Will Ibong. Will, good afternoon.
Good afternoon. So we see the markets coming up at intraday. Nigeria was closed yesterday for the public holiday, but we see it coming up strong at intraday. Well, I hope it's strong. Closes strong, 0.1%.
Yeah, well, I would like to call Mr. Bismarck Rouhani,
and not say you
who
put a touch of red
me
to it.
Every time I wear red, the market is red. You can see the market green. I obviously have red. So.
Let's wait till the close of business. So 97,000 points is seen that for the index. We're checking in on major stock markets in Africa at intraday, and we're seeing the sentiments mostly positive. Nigeria is coming up strong, as we've said. JSE in South Africa is up nearly 1%, and this is a very good one. We see how the market closes today. Let's look at Egypt's EGX 30 and see how they performed at intraday. However, they were in the red, slightly down 0.01%, still at 30,000 points there. And then we'll see the GSA in Kenya closing yesterday's session strongly in positive territory. But let's look at other markets now, the fixed income space, to see what's happening there, especially with inflation numbers that's tapered now for 2 consecutive months. We'll also want to know expectations and see what the CBN is going to do with interest rates. But we're going to be talking to Chuka Nwachukwu, who is the Group Head Assets and Liability Management, UBA. Good afternoon, Chuka. It's good to have you on the show. Chuka, as I was saying, inflation has dropped for 2 consecutive months now. How does this align with the current market liquidity that we have?
Thank you, Will. The inflation figure is as a result of what happened in August. Though we've seen market liquidity pretty tight. Market currently opened at over 400 billion debit. But then we expect to see a lot of inflows coming towards the end of the month, starting from today. We have about well over 600 billion in coupon payment coming in between now and next week. And so that will really affect the rate in the market. However, presently the liquidity constraint is still there. And of course, the inflation figure also is not just a factor of market liquidity. It's also a factor of so many other things, as well as food inflation, FX inflation, and other. So, however, by and large, liquidity is pretty tight, but we expect to see between now and end of the week, robust system liquidity coming, like I earlier mentioned.
Okay, so following this decline in inflation, what are expectations when the MPC, when the CBN MPC, Monetary Policy Committee, meets next week? What do you think is going to happen, Chuka?
So ordinarily, we expect that the MPC will begin to reduce rate, but then the event of the couple of weeks, within 2 weeks, the increment in fuel pump, that will obviously affect MPC decision, and so we will not see that. We see that play out in September. So my take and then the market expectation is that MPC will probably be cautious. I see them holding the current MPR rate. I do not think that they will hike further. Don't forget that the hike can also have the effect in terms of borrowing and lending, and then of course some of the sectors are really affected, especially the manufacturing sector. So I think that MPC will hold rate. I think that they will just be cautious and then watch the effects. They have moved rate over 800 basis points this year alone, and I expect that they will hold this rate. Considering the fact that some of the the hike, and then they're beginning to see results, which have been very positive in terms of reducing inflation.
You do share the sentiment of most analysts, so we'll wait and see what the CBN will do. But how is market faring on the first day of trade? Yesterday was a public holiday. What instruments are investors looking at, and what end of the curve are they looking at right now?
So being that there will be MPC meeting next week, and then of course, market is just coming out from the holiday. Currently, the market is slightly liquid, like I mentioned earlier, due to the coupon payment that was paid early today. And so we expect to see, we've seen a bit of a bullish sentiment. Most of the coupon payment investors are reinvesting it into the securities. So on the T-bill side, for example, we've seen a yield, slightly decreased. The 1 year, which printed at last week, printed at 18.59, is currently trading about 50 basis points below where it opened. That also shows that the bullish sentiment, going into today's trading due to the coupon payment and then liquidity that came in. On the bond side, we've also seen bullish sentiment on the 2029 and then 2033 bond. So that also indicate that most of the investors are reinvesting some of this coupon payment. And so going into the end of the week, we see moderate trading. Especially with the fact that the MPC meeting is next week, and then most of the investors and traders are have one eye on that, and people obviously are going to be trading cautiously, depending on the outcome of the MPC meeting next week.
Thank you for that outlook, Chukanwa Chukwu, Group Head, Assets and Liability Management, UBA, for sharing your perspective. Thank you so much. So we'll move on to other markets now in the Gulf region. Middle East, we're seeing mostly positive sentiments at intraday. Abu Dhabi was up 0.25% at intraday. And we'll also see Dubai slightly up 0.06%. Let's look at the stocks within other regions. Saudi, Qatari, they were trading in opposite directions at intraday. We see the Tadawul, that's the Saudi index, up 0.05%, and the Qatari index is down 0.42%. Now, GCC investors are going to be looking at the Fed. They're tracking the possible rate cuts, the decision by the U.S. Federal Reserve this Wednesday. Will the Fed cut rates, and will it drive GCC investors to emerging markets and more domestic spending? These are questions investors and other market analysts are watching out for. Now, stock futures rose early on Thursday. Let's look at the U.S. markets now. Wall Street, preparing themselves for the key retail sales data and the start of the Federal Reserve's September policy meeting, which started today. Now, on the futures side, to the S&P 500 climbed 0.36%. We see the Nasdaq also up 0.61%, and the Dow Jones advanced 0.28%. Microsoft has announced, a buyback program which made its shares rise 2% after that announcement. We saw their quarterly dividend hiked by about 10% to 83 cents per share. And that's the amount they're going to be buying back, is about $60 billion. And also we see Intel, the shares popped about 7% in pre-market trading after the company said it plans to make its foundry business a subsidiary. Investors on Tuesday will also be looking at, as I mentioned earlier, the retail sales data for August. Investors also going to be on standby for the Fed's longer anticipated rate cuts, and this move could help boost earnings growth for companies. Let's look at Asia now and see how those ones performed, how they closed trade today. It was quite mixed in that region, with Japan's Nikkei dropping as much as 2%. We saw that 1% drop because, before, pairing some losses, they were on holiday yesterday, and investors are also awaiting that U.S. Fed, the possibility if the U.S. Fed is going to cut rates, that loosening cycles of the tightening cycle that we've been seeing. Now, Japan's Nikkei, as I mentioned, lowered by 1%, and now back to, it's still at 36,000. And then we see stocks fell also because the yen strengthened. That stocks fell in that country because the yen strengthened. That's for a 6th straight session. Now, let's look at other markets now. Hong Kong's Hang Seng Index was also up 1.37% at the final hour of trade. Shanghai is closed. Korea, that's the Kospi Index, is also closed. And we also see the Nifty in India up 0.15%, closing that region up in positive territory. So the markets are looking good. Mixed sentiments, mixed for Asia markets, but we're seeing the U.S. stocks looking vibrant ahead of that, possible rate cut, and they're just waiting to see it. But months, the time is finally here now. So tomorrow we're going to find out.
Yeah, but I'm almost sure that a lot of the cut expected has been priced in by investors.
True.
Because this has been in the news. The percentage of cuts, is it going to be 25? Is it going to be 50 basis points and all of that? And I wonder how this will drive our own MPC decision, which is just next week, and I don't know if it will move a lot, but as your analyst had talked about the possibility of a hold, that's what a lot of Economists
yeah, the
are
sentiment is
projecting,
saying they
yeah.
should hold and let's see what, we've just had this pump price hike. We've seen so many things happening. We need to see how the market is feeling before we take any rash decision.
Yeah. Well, we'll see. But I mean, I am scared, I won't lie, because with all of the energy costs that we have seen beginning from late last month, I think, and then to this month, I wonder what the inflation number will look like. So even if there's a hold for this, can we overcome the impact before the next MPC? Perhaps we'll now start another hawkish move again. I don't know, but we'll follow the numbers.
Follow the numbers and see, hopefully.
Exactly. Thank you so much, Will.
All right.
All right, now let's head to London, where a new poll from the Bank of America shows that UK is Europe's most preferred stock market. We know that UK are very proud of their services sector. That's their glory. Now they have their stock market also being called the most preferred in Europe. And I'm sure that Juliana is very proud of this. They've overtaken Germany. Germany is lagging behind the UK now. Juliana, good afternoon.
For the UK government and also investor sentiment, which has been rattled over the past couple of years, particularly if you go back to the contentious divorce from our European partners, Brexit. There were so many concerns, particularly around the city, about where we would stand in our global competitiveness, because there were rules that weren't in place that didn't favour the services sector. But I think the reason why the Bank of America have listed the UK as the most preferred stock market destination in Europe is now because of Brexit. And post-Brexit Britain, I think America and other destinations see Britain in a more favoured position because they don't need to stick to EU regulations. And we know that especially the tech-heavy NASDAQ have had major issues when it comes to compliance within the EU. So that's one of the reasons why. Also as well, geopolitical stability, I think, because of the fact that we've got the channel in between mainland Europe and Britain, investors see Britain as relatively geopolitically stable. Of course, I know there are discussions now about whether Britain are going to go in harder when it comes to the war between Russia and Ukraine. But in terms of proximity, we're further away. And I said this is a really good story, Inni, for Britain. And it is, because just 24 hours ago, we were discussing the fact that Darktrace, which has been a very successful stock market firm since the COVID lockdowns, it's a cybersecurity firm, they announced yesterday that they're going to be delisting from the London Stock Exchange, and they'll be heading to New York. And this isn't the first time that we've seen really strong competitive British firms delisting. A lot of this is to do with mergers and takeovers. But, you know, having such a negative story 24 hours ago about the blue chip index, and then you've got this pretty good assessment on the UK stock market by the Bank of America is a really good sign, especially going into PMQs for the Prime Minister at a time when everybody is focused on the economy.
Yeah, and I'm sure the investors, other markets there are excited about this. I hope that shows in the numbers.
It has been reflected in the blue chip and intraday, because the all shares up, it's up by 0.59%, the FTSE 100 up by 0.60%, and the FTSE 250 up by 0.45%. In the currencies market, the British pound is trading up against the US dollar 2 by 0.03%, though down against the euro by 0.03% and down against the Japanese yen by 0.12%.
All right, Juliana, thank you so much for that, and congratulations to you guys.